Check, 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 check. Mic check, 1, 2, check, check, check. Check, mic, 1, 2, 1, 2, check, 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 check.
¿Y qué dijo la señora? ¿Se la dijo?
All right, good afternoon, everyone. Sorry for the delay. We'll go ahead and call this meeting to order. It is 5:37 p.m. Welcome to the Laredo College District Fort McIntosh campus. This is the Finance and Audit Committee meeting. We will begin with roll call. Esteban Rangel.
Present.
Ms. Tita Cantu Vela. Is she on the phone?
Here.
Mercurio Martinez. And Jorge Delgado, present. Okay, we'll move on to agenda item number 3, presentation of process qualifications, granting and other information pertaining to foreign trade zone designations, Webb County Appraisal District.
Good afternoon, members of the board. For the record, Cesar Vela, Vice President of Finance. For this item, we are going to be asking that we defer the item to the February meeting. Unfortunately, Mr. Martin Villarreal was not able to attend the meeting, and he has asked that we place it on the agenda for February.
Okay. Refer to legal counsel. No action is needed, correct? In order to defer the item?
That's correct, sir. No action is needed.
All right. Thank you, Mr. Vela. Thank you, Mr. Muir. Move on to agenda item number 4, which is the November 2021 financial report. Mr. Vela?
Yes. For the month of November 2020, we have the general operating revenues. As of November 30th, we have revenues of 17,995,561 out of a budget of 61,706,837. That represents about 29% of our budgeted revenues. The only items here to report on the revenues, of course, is the tuition revenue. As you can see, our tuition for the fall semester is at 0. And again, this is due to the incentive that we offer for the fall semester, where we waived the tuition charges for our students. The waiver did not include the dual students. For the fall semester revenue, tuition revenue for dual enrollment is $500,768. The one item that will be making up for the loss is highlighted under other funds, which is the Higher Education Emergency Relief Fund line item. For the year, we budgeted 4.2 million from the HERF funds. For the fall semester, the tuition waivers total 4.8 million. Now, we did extend the waiver for the spring semester. So we will be charging the HERF funding, the 4.8 for the fall semester, in addition to the amount that we have for the spring semester. Currently, we have around 2.8 million already for the spring semester. And again, those funds are available under the HERF funding.
Chair recognizes Mr. Rangel.
And Mr. Vela, how much money do we have left on that?
We have about $21 million that are left.
And correct me if I'm wrong, it has an expiration date?
May of this year, sir. Yes.
May of this.
Yes. Right now we are projecting, or our projections were that we were going to use up about 8 million for the tuition waivers. And also we'll be charging the 3 million that for the stipend for employees. And then we do have another 4 million, I believe, that will be going out to, for student aid, additional emergency aid.
And so we might potentially be leaving some money.
Right now, we are looking at the possibility of asking for a no-cost extension.
Okay.
And again, our plan is that if we do have funds available, once we pay out the tuition waivers, the stipend, is that any amount left be distributed to students as emergency aid.
So that could be a possibility, and we could just, so what you're saying is we're just gonna ask, we could just give it out to the students.
Well, that is an allowable cost under
Okay.
her funding. From the institutional portion, the institution can elect to offer emergency aid to students. Again, if we do have a balance at the end of all these transactions, and we're not able to obtain that no cost extension, that would be the option to offer another round of emergency aid to students.
Other institutions asking for an extension as well?
There are other institutions that are in similar situations, and yes, discussions are that there will be requests for no cost extensions.
And the reason why I'm asking for that is, do you think we will be granted that?
There is a possibility. There's again, there is a good number of institutions that still have balances. As a matter of fact, there are institutions that have a lot more unspent funds than we do. So there are already discussions of submitting the no cost extensions. Again, we're looking at the end of all once we process all the transactions that we have pending. We have projected that we were going to have around 400,000 left.
Mhm.
However, right now, the amount that we have so far for the spring semester only is totaling 2.8 million. We had projected 4.2 million. So that's going to leave us about 4.2. I'm sorry, it was 2.8, almost about $1.4 million.
Okay.
That will still be available. So when we add that 400,000 that we get projected, we're looking at about 1.8 million that we would have to spend down. Now, another amount that we have pending right now is the CARES Act 2.0 with the city of Laredo. We committed 1 million for that program. So again, that's also part of our request for the extension. As we have those trainings, we want to make sure that we spend down that $1 million. Now, the commitment that we made with the city is that the city has a little bit more time to spend down their funding. So we make the request that we apply our portion first before the city kicks in with their $1 million.
What's the time frame for the CARES Act?
Again, oh, you're talking about the
The one
trainings.
for the city,
The
yeah.
trainings, I believe it's a year that we committed to. So it'll be this fiscal year per se. So our fiscal year ends in August. I believe the city's fiscal year ends in September.
Okay, thank you, sir. Thank you.
Mr. Vela, you said that the plan is to apply for that extension?
That is correct, sir. Yes.
What's the date of that application?
There's no deadline so far. It's to request the extension. Again, we've already submitted an inquiry to the Department of Ed, and they're already looking at it.
And is there a plan B in the event that they deny that request?
The plan B, like I mentioned, would be to offer emergency aid, another round of emergency aid to students. Now, we do have a additional request for equipment that we're also considering in case we're not able to spend down the complete amount.
Does that equipment include the equipment for the faculty as far as computers?
Yes, sir. It's actually for distance learning, and so it would be for faculty and students. Okay. And again, as far as the revenue, that is mostly the item that we had, was just pointing out the tuition waivers again for this fall semester. Again, we have 0 tuition. We budgeted 3.2 million, and that was for the spring semester and the summer sessions. Again, we did offer the waiver through the spring semester. So for the spring semester, those numbers will come in at 0 also. For expenditures, as of November 30th, the expenditures total 14,184,725. That represents 22.99% of our budgeted expenditures, which are 61.7 million. We don't have any variances right now at this point to report. Comparing to last fiscal year, we're pretty much in line where we're supposed to be at this part of the budget. Any questions on the expenditures? No?
Mr. Vela, I'm sorry, can you go
Yes.
back?
Yes, sir.
With regards to line item 76 for miscellaneous on the 75th anniversary, did that budget change from 75 to 60,000, or we've already spent 15,000?
For the 75th anniversary, no, the budget still stands at 75,000. And at this, as of November 30th, we had not recorded any expenditures yet.
So why?
Oh, I'm sorry, you're looking at the encumbrance, the 15,000. So
Yeah.
that is a purchase order that is currently encumbering 15,000 for future expenditures.
What is that of?
I don't have that information, but I can have it for the board meeting.
Okay, or if not, just send it to the committee, please.
For the other funds, budget versus actual as of November 30th on the EDC, the revenue for the year is 52,890. It's mostly composed of the state appropriation. Represents 25.7% of our budget. Expenses are at 57,107. Right now, it may change to the fund balance for the Economic Development Center of a decrease of $4,217. As far as auxiliary services, the revenue for the year is 717,276. That represents 54.5%. We are seeing an increase in the student activity fee revenue. And again, this is attributed to the incentive that we offered. So we did see an increase in the semester credit hours for the semester. Since we did not waive this particular fee, that is why we're seeing that slight increase. Our budget stands at 1.3 million right now. The actual revenue for the year represents 54.5% of our budget. Expenses total 219,184 for a net change right now to the fund balance of $498,092. For the restricted funds, which are our federal grants and our state grants, the revenue for the year is 16,293,000. And the expenses are 16,293,000. The majority of the revenue that we're seeing is the Pell grant that for the fall semester. That amount totaled $8,210,000. And again, we do have revenues that are currently being recorded for the CARES Act fund money that is still pending to be spent down. The facilities master plan phase 3 construction. We began this fiscal year 2022 with a balance of 21,968,255. We have collected interest revenue for the first 3 months of 35,766. Construction expenditures for the year are $916,755, or a net decrease of $880,989. So the balance as of November 30th is stands at $21,087,266. For tax collections for fiscal year 2022, we have collected a little bit under 20% of our tax levy. Total collections for the maintenance and operation tax rate is $7,906,843. At this point last year, the collection rate was 11%. So again, we are ahead of compared to last year, and by about 8% point. And compared to 2020, the collection rate was 15.64%. For the monthly investment report, investments total $92,973,025. The interest revenue for the month of October total $42,636. The annual investment income for the first 3 months of the fiscal year totals $85,439. And lastly, just an update on the general operating fund balance for the fiscal year 2021. We began the year with a fund balance of a negative fund balance of $12,998,790. For the year, we had a net increase to the fund balance of $12 million due to operations. The majority of the $12 million increase, we did have about $6 million from operations, and $6 million was actually revenue recognition for lost revenue during the pandemic. That revenue was charged to the CARES Act funding. So again, the net change to the fund balance last fiscal year was $12,054,272. We did have the adjustments for GASB 68 and 75, and that is the pension liability and the health insurance liability for retirees. So once we take those adjustments into account, the ending fund balance for 2021 was a negative $2,545,744. For the fiscal year 2022, for the first 3 months of operations, we do have an increase to the fund balance of $3.8 million. So currently the fund balance as of November 30th stands at $1,265,092. Any questions on the report?
Any questions from anyone in the committee? Chair recognizes Judge Martinez.
Thank you. I have noticed that. There's some items in this audit that is, I feel ought to be addressed. And among them, of course, is approximately indicated that the college has not received a credit or refund of approximately $60,000 for a reduction in project costs that took place, but was never received nor reflected in the application and certificate of payment documentation. That is one item. The other one is that and I certainly agree with this recommendation, that college employees be paid for actual hours worked on a bi-weekly basis instead of semi-monthly. Especially right now when the situation is really pretty tight due to all of these unfortunate coronavirus, situations that we're going through. When it comes to the capital asset inventory out here, we recommend that the college improve its accountability and control of capital assets by conducting a physical inventory at least once every 2 years. And frankly, no physical inventory has been done at all in quite some time.
Yeah, Judge, and actually, we will address those. There is an agenda item to address those items.
Yes, sir.
Yes, and I do agree with the recommendations being made by the auditors. And we do have an update on some of those items, and I'll go over those items. I believe it's agenda item
Okay.
9 as part of the financial audit. But yes, we do have an update on some of the items that were presented by the auditors.
Excellent. And the last one, and it says, we recommend that the college establish a fraud hotline where individuals may report suspicions of fraud anonymously through a phone call or through the internet. Okay, these are recommendations that are being done. Of course, I think we ought to address those issues. And I just thought I'd bring them up.
Yes, Judge, and like I mentioned, we have reviewed the draft recommendations from the auditors, and we're in agreement with the findings. And like I mentioned, we have some updates that we'll present to the committee tonight, and also to the full board on Thursday night.
And if you can, Mr. Vela, and thank you, Judge, if you can just keep those items that were brought up once we bring that agenda item up shortly.
Sure.
Okay. Is there any other questions for Mr. Vela? Okay. We'll move on to agenda item number 5, approval for the purchase of computer equipment for the computer technology department. Mr. Cesar Vela.
Yes, members of the board, this item, we are asking the board to approve the purchase of computer equipment from for the computer technology department. The equipment is going to be used for instructional purposes, and it includes routers, switches, the network interface modules, and the associated cabling for the equipment. The equipment is being acquired using DIR contract number DIR TSO 4167. The cost of the equipment is $55,062. The board had approved the purchase of this equipment as part of the fiscal year 2021 savings. This was presented to the board as part of the 2022 budget approval.
Mr. Vela, does this, I don't believe it does, and I know it's been brought up many times before, but is there anything that can be considered or done about the internet speeds and Wi-Fi capabilities throughout the campus?
I know that some of the projects that we've done recently was obviously acquire more access points throughout both campuses.
Mhm.
And then we also upgraded the bandwidth for internet access. Now, I know I don't want to put Mr. Chavez on the spot here, but I know that that's one of the items that he's been looking at, trying to add access points for wireless connectivity, as well as having an increase to the bandwidth to increase the internet speeds.
Thank you.
Should we vote on this?
No action will be taken.
No, no action being requested.
No. Yeah, if you'd like, go ahead. Yeah, you can do it from there. That's fine.
Good
Turn your
evening,
mic on before you get in
members of the
trouble.
board. Albert Chavez, Senior Director of Information Technology. To answer your question, we're in the process of finalizing several quotes to do an infrastructure upgrade here in the campus. In particular, we have a lot of buildings that have old fiber technology. So we do have funding as part of a bond project that we are going to be using to make those upgrades here on the campus. For example, we're also going to be relocating our internet services that are currently located in the Rechiga Hall, which is an older building. We're going to be moving that over to the Martin Building, all for the process of improving the bandwidth here on the campus. And again, like Mr. Vela mentioned, we're also looking at a survey of the wireless infrastructure on the campus, so we can see where we have gaps, so we can make improvements.
Thank you.
That survey,
Chair recognizes Mr. Rangel.
that survey, is it gonna be sent out to faculty, I mean, to staff and students?
The survey is done by a company. It's called the
Oh, okay.
radar frequency study. So basically, they come in throughout the campus
Oh,
and they assess the signal for our wireless infrastructure, and they provide us a report as to where we need to make enhancements.
but the biggest reason why we struggle with that is because we're right next to the border, right?
Well, that would be for cellular service. So two different
But
things. So
even for Wi-Fi as well?
no, the Wi-Fi is, which is what I was referring to. The radio frequency study, basically they come in and they bring laptops and so forth, and they walk through the campus and check your wireless signal to see if there's any weak spots in the campus for Wi-Fi. Now, cellular service, because Laredo College, Fort McIntosh is on the border, we are on the, there is a line that FCC has in place as to where the US cellular companies cannot bleed over to another country. We are right on that line. And basically, on this camp facility, this is where the signal drops off for all the US providers. Unfortunately, on the Mexican side, there is no such regulation, so their signal can bleed over into the United States. And what happens is their signal overpowers our signal, and our phones connect to the Mexican service. So that is another project that we're also going to be looking at to see how much it would cost to bring in some infrastructure to improve cellular service on the campus.
Thank you very much. Okay. We'll move on to agenda item number 6, approval of contract with Strata Information Group, Inc. for Degree Works Consulting Services. Mr. Vela?
Yes, this next item is, we're asking the board for approval for a contract with Strata Information Group, Inc. in the amount of $176,860 for Degree Works Consulting Services. We're also asking the board approve the use of $176,800 from the bookstore fund balance to fund the project. Currently, we have $2.3 million in the bookstore fund balance. The work that will be provided by Strata Information is consulting services to assist with the installation, configuration, functional and technical training and project management related to Degree Works project requirements, which include also upgrades to the software. And again, this is the software that is utilized by students and advisors. And again, it is so that it's a tool that students use to make sure that they that guides them and helps them with their degree requirements. So essentially, it's an online software that they can utilize to keep track of their courses and to make sure that they stay within their degree plan.
And this is something new, correct? This is not anything that we've had before?
We've had it. Unfortunately, we have not been able to roll out all the functions of the program or the software.
Why not?
This software was acquired through a grant. And again, due to limited resources, we had not been able to fully roll out the program. So again, we're asking again that the board approve the contract, and this will include about over 1,000 hours of consulting and technical assistance from Strata Information Group. The contract is through a purchasing co-op. It is under the Educational and Institutional Cooperative Services contract, and the contract number CNR 01502. Again, the funding if approved, would be to utilize 176,860 from the bookstore fund balance. Currently, we have 2.3 million in that fund balance.
And this has everything that we need, nothing else pending as far as what students may need.
My understanding, this is the complete package.
And this is annually or?
This is a one-time consulting
One-time,
service,
okay.
yes. Like I said, it covers over 1,000 hours of consulting work.
Okay. Any questions for members of the committee? Thank you, Mr. Vela. We'll move on to agenda item number 7, renewal of interlocal agreement between Webb County and the Laredo College for the collection of ad valorem taxes. Mr. Cesar Vela.
Yes, this item is, we're asking the board to approve the renewal with Webb County for the collection of ad valorem taxes. The renewal is for an additional 4-year term. There are no changes to the agreement. Terms remain the same. The only change would be the term itself. It is again a renewal for 4 years. And the agreement would run through August 31st of 2023. The services to be provided by the county would be the same. And you have a description there on the agenda. And essentially is to provide timely deposit of funds, issue delinquent statements to taxpayers, the calculation of the effective tax rate, which is done annually by the tax assessor collector as part of the budget process, and publish the required notices as outlined in the Truth and Taxation Guide. The compensation rate to the county would be at a rate of 0.40% of the current year's tax levy. And again, it is the same amount or the same percentage as the original contract. So again, the only change would be to the term, just an extension of 4 years.
Okay. Any questions from members of the committee? Thank you, Mr. Vela. We'll move on to agenda item number 8, approval of purchase of furniture for the Memorial Hall building for the bachelor's degree in organizational leadership program, office and student space. Mr. Cesar Vela.
Yes, we're asking that the board approve the purchase of furniture for the Memorial Hall building in the amount of $75,424. The furniture is being purchased from Kimball Office using the Omnia Cooperative Buying Group contract number 2019.001896. Again, the purchase of the furniture will be for the Bachelor of Science in Organizational Leadership offices and student spaces, which will be located at the Memorial Hall building. The purchase will be funded using Facilities Master Plan Phase 2 savings. We currently have about 2.4 million still left in the Phase 2 bonds. Out of those 2.4 million, we do have 1.4 that are set aside for the Allied Health renovation project. And then we did set aside close to 470,000 for the P14 renovations. However, we still have funding available to cover the purchase of the furniture.
Chair recognizes Mr. Rangel.
Staff chose this furniture, right? Like the department, that
Yes.
department.
Yes, sir. The department actually worked with the vendor, which is a vendor that we've used for the classroom furniture and office furniture throughout that building.
Okay, so they're giving that recommendation of what they want.
Yes, sir.
Okay, thank you.
And you do have a copy of the request breakdown
Yes, I did see. Thank you.
as part of your in your board packet.
Yes.
Thank you, Mr. Vela. We'll move on to agenda item number 9, the fiscal year 2021 annual financial report. Mr. Cesar Vela.
On Thursday night, we will have the auditor make the presentation of the annual financial report along with the audit report. As Judge mentioned, you have received the draft of the conduct of audit report. That is one of the reports that are prepared as part of the financial audit. Before we go into the auditor's reports, I'll just briefly give you the summary of the financial reports for the year ended 2021. With your book packet, you should have received a copy of the financial report. Financial report has all the information. It is divided into three sections. One of the sections is the management discussion and analysis, which is essentially just an analysis of the activities for the fiscal year. And then it contains the three reports, which are your statement of net position, the statement of revenue and expenses and changes in net position, and the statement of cash flows. I'm not going to go through the whole report. I'll just focus on the statement of net assets, the statement of revenues and expenses, and the statement of cash flows. Just quickly, again, the auditor will go over some of this information on Thursday also. As of for the year ended August 31st, 2021, the net position of the college stands at 64,870,960. Compared to last year, which was 46,087,379. That's an increase of 18.7 million. The increase is attributed to increases in the current assets. We did see an increase in cash and cash equivalents of 6.3 million and an increase of federal receivables of 6.4 million. Again, the increase to the receivables for the federal receivables is attributed again to the funding that we received through the CARES and HER funding. In addition to that, we did see also on the liability section, we did see a decrease of 2.8 million to the current liabilities. And that was attributed to decreases in accounts payable of 1.6 million and to the compensable absences of $500,000. We did see also decreases to the long-term liabilities of 11.8 million, and that is the bonds payable. We did decrease from 184 million to 172 million. And again, those were due to the payments that were made last fiscal year. Like I mentioned, overall, the net position of the college increased by 18.7 million, from 46 million to 64.8 million. Now, included in the financials are the financials for the LCC Education Foundation. For the foundation, they also saw an increase to their net position. And that was attributed to the $1 million that were received as part of the TikTok donation. So their total assets went from 583,385 in 2019 to 1,309,218 in 2021. I'm sorry, 2020. Again, their fiscal year is different from the college. They're using a calendar year. We're using the fiscal year September through August. Their fiscal year is the calendar year, January through December. For the revenues and expenses for the institution, operating revenues increased from 18.9 million to 23.6 million. That's an increase of 4.6 million. And again, the increase is attributed again to federal revenues due to HERF and CARES Act funding. We did see a decrease in tuition and fee revenue of 1.4 million. And again, that was expected as we saw decreases in enrollment last fiscal year. We also saw a decrease in the discounts. The discounts in 2020 totaled 19.2 million. And these are the discounts that are offered, whether they're state mandated discounts or waivers, or the dual enrollment waivers that the institution offers. So those totaled 19.2 million in 2020. For 2021, it was 16.9 million. As far as the operating expenses, we did again see a decrease in operating expenses of 9 million compared to last year. And again, those were reductions that were made due to the pandemic. Most of those reductions were in the salary line items. As far as non-operating revenues, we did see again a decrease of 1.6 million. State appropriations actually decreased by 927,000. And the major decrease that we saw last fiscal year was actually in the federal revenue non-operating Title IV, which is our Pell Grant revenue. We did see a decrease of $3 million from 19.3 million last fiscal year to 16.3 million. Again, once we took into account revenues and expenditures, the overall increase to net position due to operations totaled 18.7 million. So again, our net position went from 46 million to 64.8 million. For the LCC Education Foundation, again, the increase of 800,000 approximately was again attributed to that donation from TikTok. As far as the statement of cash flows, net cash used by operating activities, we did see a decrease of 259,000. Cash flow from non-capital financing activities, this is all your state appropriations, grant revenue. We also saw a decrease of 1.5 million for the year. And that again is attributed to the Pell Grant revenue. We did see a decrease of 3 million in Pell Grant revenue. And then financing activities, we did see again cash used for financing activities, a decrease of 13,700,000. One of the decreases was attributed to the acquisition and construction of capital assets. So again, we did have less activity last fiscal year as the projects for construction started to wind down. Overall, again, we did see an increase for the fiscal year in cash and cash equivalents of 4.5 million or about 4.77%, from 94,777,000 in 2020 to 99,294,275. And again, these are the major statements in the financial statements. As you can see, the financial position of the institution increased by 18.7 million. And again, that is attributed a lot, one, because of the increase in federal funding that was received last fiscal year, in addition to expenditure savings that we had throughout the fiscal year. So then the next component of the financial report are actually the auditor's reports. And those reports are in your book or in the financial report, and you can find the auditor's report on page 10, which is titled the Independent Auditor's Report. And this is basically their report on the financial statements. And in there, and I'll read the report, just that section. In their opinion, the financial statements referred to above present fairly in all material respects the financial position of the college. So this is what they call an unmodified opinion, which is a clean opinion based on the auditor. They did, however, make some recommendations which we'll go over, and those are the ones that we shared earlier with the committee, and the ones that were pointed out by Judge Martinez earlier in the presentation. But I do want to point out that in your report on page 84, you do have a summary of the auditor's results for the financial statements. Like I mentioned, the auditor's report that was issued is an unmodified opinion, which is a clean opinion. They did not find any material weaknesses in internal control over financial reporting. They did not find any significant deficiencies to be considered material weaknesses, and that they did not find non-compliance material to financial statements noted. There were non-noted non-compliance material to financial statements. For federal and state awards, again, the opinion was an unmodified opinion. They did not find any material weaknesses. They did not, there were no significant deficiencies noted. And there were no audit findings that need to be disclosed to the uniform guidance or the state of Texas single audit circular. So again, those were the reports that were issued out by the auditor. Again, they were all unmodified, which are clean opinions. There were no material weaknesses and no significant deficiencies noted in the reports. However, they did point out some areas for improvement, which are part of the that was passed out earlier during the meeting, and it is titled "The Report on Conduct of Audit." And as was noted earlier, on page 3 of the report, there's a series of items that were identified during the audit by the auditor. The first one was regarding the payment of $148,193 that was issued out in October of 2021 to train for the HVAC upgrades project at the South Campus. This particular transaction, what happened was that we had received the payment application for payment from Train on this particular project in July, requesting the final payment for the project, and the project itself had been closed as of August 31st. However, during the reconciliation process that is done by the accounting office, they noted that the purchase order did not total or did not agree to the amount that had been billed. So there was an inquiry to Train requesting clarification as to why the amount was less, the amount billed was less than the purchase order. That prompted Train to look at their records, and they discovered an error on their side. They had internally credited the project $109,000. And the reason they did that was they have several divisions, and apparently in order to recognize the revenue with the proper division, they had credited the project the $109,000, and they were going to bill us separately for the $109,000 by the other division. Again, that never happened. They credited the project, but they never billed for the $109,000. Now, we would have questioned the charge because we had a contract that had been approved by the board for, and this project was for 1.8 million. That was the original contract amount. We also had a change order that had been approved by the board for 198,000. Included with the change order was a $60,000 contingency, which is the $60,000 that were referenced by the auditors on the credit. There was a contingency of $60,000 to dispose of the treated water at the South Campus. That work was not done, and we were aware that the work had not been done. However, because Train had made that $109,000 credit to our account, there was confusion on our side because we thought that they had already applied the $60,000 within the 109. So again, when accounting reached out to Train to request an explanation as to why the amount billed was less than the amount of the purchase order, that's when Train realized that they had credited the 109, but they had not charged us for the 109,000. So yes, we are pending a credit from Train. And as a matter of fact, as of yesterday, we did request from Train an explanation. We did receive a letter from Train, which will provide as part of the documentation to the auditors and to the board, essentially explaining what happened with the 109,000 and with the credit that is owed to the college. So they're in the process of refunding the amount that is owed to the college. Again, as far as the process itself, there is a process in place. Again, because of the 109,000 credit that Train internally did on their side, again, creating confusion on our side because we thought that the 109 was part of the 60,000. There was the 60,000 were included in the 109,000. But again, we are in agreement with the auditors that this needs to be reviewed. But again, we do have a process in place, and that is again a reconciliation process of the contract amount to the purchase order amount to the amount that was billed. And that's eventually how the error was caught. It was caught by our accounting office in September. And that's when Train made their correction on their side. Again, the payment for the 109,193 was issued in October. In addition, with the 109, there was a $39,000 payment included. So the total amount that was paid in October was 148,193. And again, the 39,000 was an amount that was owed to Train. It was confirmed by our physical plant office that the work had been done and had not been billed by Train.
And the refund is for 60,000, correct?
It is for 60,000, which was the amount that was owed. I'm sorry, the contingency for the water disposal. There is one pending item of 20,000 for additional services. So right now, the credit that they're showing is 40,394.71. Once we offset the 20,000 that we owe to Train. Any questions on this one item?
No, sir, I'm fine.
Okay, the other item that was brought up as part of the recommendations has to do with the hourly employee pay period. And this is an item that internally we had reviewed a couple of times. Currently, the process that we have in place or our pay structure is we pay semi-monthly. So we pay both contract employees and hourly employees on the 15th of the month and at the end of the month. So when we do a calculation, the calculation turns out to be 86.66 hours paid per pay period. That not always works out to the hourly employees. Depending on the number of days within those 15 days, they could work 80 hours, they could work 87 hours. So there's a reconciliation process that occurs. This process is done by our payroll office. It's done on a manual basis. So yes, again, the concern that the auditors are bringing up, we are in agreement. As a matter of fact, like I mentioned, this is an item that we had looked in the past. One of the challenges that we had is that we did not have an electronic time clock system. We did purchase an electronic time clock system. We have already implemented. All of our hourly employees are already using the time clock system. Now is making the change. There are some challenges to making the change from semi-monthly to bi-weekly because employees will get impacted. Well, right now, every pay period, like I mentioned, they get a fixed amount, which is 86.67 hours. So in order to change to bi-weekly, we would need to pay in arrears. Right now, we're paying up to date. So on the 15th, you get paid from the 1st through the 15th. In order to pay bi-weekly, we do have to do an adjustment and pay in arrears.
Yeah.
So that's gonna entail making an adjustment to the hourly employees and say, okay, on the fifth, let's say that we're gonna pay the first 2 weeks of this, what is it, February in arrears, they're gonna have to wait. So there's a couple of ways to handle that, and one of those is looking at the holidays and try to determine how can we maybe make the adjustment during holiday pay so that the employee doesn't feel the impact. Again, because we would need to set those 2 weeks in arrears, and then from moving forward, they would get paid the 80 hours that they worked a week
2 weeks prior.
or 2 weeks or a week prior. So it is something that we've looked at and we want to review. Obviously, we want to give the employees also time, because a lot of the employees may have their direct deposits, their payment, mortgage payments, so the adjustments can be made. But yes, this is one of the items that we are in agreement with the auditors, because there may be the potential of underpayment or overpayment to an employee.
And that was one of my questions. Do we owe any money, or have we been paying more to any hourly employees?
It works out if the employee stays for the complete year. Where we do have to look at it is when an employee leaves, an hourly employee, a reconciliation process is done to make sure that we didn't overpay or underpay the employee. As far as and this is, again, this is a draft report. Obviously, the auditor will finalize it and present it to the board. One of the items that we do need to ask the auditor to make a change is that the differences that may occur during a pay period. For example, like I mentioned, every semi-monthly payment is 86.66 hours that are paid. Let's say that particular pay period, it was 90 hours. It just so happened to be that the employee should have gotten paid 90 hours. The paycheck is not adjusted at that point. I think that the wording on how the auditor presented the item, he makes a comment that the adjustment is made via vacation or sick leave pay. No, the employee will always get the 86.66 hours paid every 15 or end of the month. Where the adjustments occur is if the employee terminates or separates employment, then at that point, if it's an hourly employee, you got to look at and make sure that there are no hours that are owed by the employee or that are owed by the institution to the employee. So again, we are aware, like I mentioned, and the first step was get the time clock system, which we currently already have, and we have set up all of our hourly employees, our part-time employees, and our work-study employees already on that time clock system. Now, part-timers and work-study employees are not an issue because they do get paid in arrears. It's just the full-time hourly employees that are currently paid under this system.
Chair recognizes Mr. Rangel.
Mr. Vela, what would be the impact in the payroll department on this? And I'm talking about, I guess now they're gonna have to completely change the style of how they'll operate, but what would be the impact on that department?
Well, the impact would be, right now, we process one payroll every.
Exactly.
So we got contract employees, hourly employees, and faculty all getting paid on the 15th. Now, we do have the work studies. They're on a different pay system. But again.
But it's a small percentage.
Yes, it's already automated.
Mhm.
Now, once the hard work is done, which is obviously moving everybody to a bi-weekly pay period and doing the setup, because that's what also, we got to set up the payroll system to calculate payroll bi-weekly, not just the pay, but also all the deductions like the health insurance premiums, your retirement contributions, all that will need to be adjustment. And that will be a combination of the payroll office and the HR office working together on
Mhm.
making that change. But as far as, to answer your question, as far as the impact to payroll, yes, there may be an impact because it depends on how the change is made. Right now, the recommendation is to do it for hourly employees only and leave contract employees and faculty semi-monthly. So that would entail payroll running an additional 2 to 3 payrolls a month.
That's my next question. Have we considered, speaking to the administration for the payroll department? I mean, we have to be considered on their end. It's either everybody or nobody, that's just my opinion. The next thing is, have we ran a survey with staff to see who would want to go into that system? Have we even looked into that?
No, we have not done that survey yet, sir. But
I
that-
think it is important to
Yes.
do that, and if you can possibly start doing that, and maybe sending out, to everybody to be able to see if they would want to be in that system, into that pay period, because I think it's important that we get some feedback from staff, because I mean, we will get recommendations from people, from just saying, hey, we recommend you doing this, but if staff doesn't really want it, and plus it's still gonna put a burden into a certain department, then why do it? So if we can do that, I think it would be helpful to make the decision to the board, because and then also have a feedback from the payroll department and the HR department, like you mentioned, it impacts those 2 departments on seeing this is gonna be an impact. Let's just say on the payroll department, I might need 2 more staff members to be able to be running this system that you want. And I think that's crucial to be able to us make a decision if we would want to actually go into this recommendation. That's
Yes,
just
sir.
what my opinion.
And those are actually very good recommendations and questions and suggestions, Mr. Rangel. Because yes, when we were reviewing the recommendation, some of the discussions with the payroll manager was, okay, it is gonna impact the number of payrolls that payroll
Exactly.
will have to process. Do we have the resources in that office to do that? So that certainly, we would need to take a look at that.
That's what I'm
but-
saying, whenever, because I know, again, when this is a recommendation from an auditor, but we need to get a recommendation also from the payroll manager, and then also from staff. I think it's very important that we get those 2 aspects. So then that way the board can make a solid decision if we would want to actually go there, because if we're gonna do this, and then we're gonna set back a department because they're clearly telling you we're gonna be running late, constantly, and people are not gonna get paid, or people are gonna get overpaid or underpaid, whatever it might be, because we don't have the resources. I think it's important that we know that. So then that way we either infuse the department to be able to sustain the recommendation, or whatever we have to actually do.
Sure, and we'll take a look at that. I think that's a good idea, to send out a survey to all employees and see what their thought is on making that switch.
And including everybody from administration to hourly wage employees. Maybe administration also would want to go into that, system, or they might say, no, I've been doing this for 30 years and I'm been used to getting a paycheck once a month, and that's fine, but I think it's important that we get that information. Thank you.
On any other questions on this one item?
No,
Okay. The other recommendation that they brought up as part of their review was the capital asset inventory. Just to clarify, we are conducting inventory of both campuses. However, there is an item here, as is being recommended by the auditors, that we feel we do need to work on. And we do agree with the recommendation. And what has been happening is that the inventories have been performed. However, there have not been a full-blown inventory of the whole campus. They're being done in sections. The reason for that is that, again, looking at the resources, we have 3 full-time employees in that department that are no longer, they're not only responsible for the inventories, but also for any of the moves that are being requested, especially right now with construction where assets, whether it be furniture, equipment, computers, they're the ones who are working with movers, or then they themselves working on moving some of this equipment. Again, but they have been doing inventories in sections. What has not been happening, and this is what needs to be corrected, and again, like I mentioned, we are in agreement with the auditor, is that their current process is they go into a building, do an audit of the building, document the audit, go back to the office, but they're not reconciling it to what we have it on the system. The philosophy or the idea of, or the plan that we're following is we're going to reconcile once we complete the whole inventory. Well, it's taking a while to complete the whole inventory. So the auditor, when they went into this area and they looked at it, they said, okay, well, you are doing your inventories, and we see that you went into this particular building, you found items, but you haven't gone to the system and updated your system and said, okay, we inventoried the Falcon conference room and we accounted for all the tables and chairs. You have it on paper, but you haven't updated the system if there were any discrepancies. So that's where the disconnect is. That's what we need to work on. So I've already had a discussion with the property inventory manager. Once we're done with the presentation of the audit, we'll conduct a meeting to correct that deficiency.
Chair recognizes Mr. Rangel.
Thank you. So in other words, they don't have kind of like, I would say a clerk to be sitting down and literally, here's what I audited, and that clerk is going to be inputting all this information every time that they get handed, I guess, the documentation. That's what you're saying.
Well, we do, all 3 of the employees actually are trained to enter information, but they're also out there
That's what I'm
doing
saying.
the move. So again, it is again, if we look at the number of staff that we have and the number of volume that we've had, because again, of all the moves that we've had with construction, we may say that, yes, we're probably short 1 or 2 people in that area. Now, what we've done to try to help out those departments is we've looked at the temporary staff.
I was about to say that.
But just recently, again, with the pandemic, it's been very hard to find people, even through the temporary staff. We've gotten sometimes employees or staff that they send us, they come one day, they don't come back the next day. Sometimes they leave at half a day and they won't come back. So again, it's been challenging, but like I said, one of the ways we can tackle this is, okay, we can continue with the plan of doing the inventories in sections. It's just a matter of assigning somebody or sitting down and as soon as you're done with that section, go ahead and reconcile it and enter it to the system.
And so then even with like staff or all those, they're not staying.
The temporary staff?
Yeah.
Yeah, lately we've had instances where we can't find anyone. And if we do, they'll come in a day, the next day they're not here. Or we've had situations where sometimes they just here half a day and they don't come back after lunch. And then the temporary staff that we get is actually to alleviate them and help them out, to release them to do exactly what you said, get somebody on the computer and enter the information. And the temporary staff is out there helping moving stuff or helping with the actual physical inventory, part of it.
And is the system, is the system, like updated, the system that they're using? Or are they doing it on a piece of paper?
There, and that is the other thing. Right now, we use Banner. Banner has an inventory system, but it is not the most efficient system out there. We've looked at other third-party solutions. It's just that the cost was considerable. As a matter of fact, we even approached a company out of San Antonio that offers inventory services. Along with the services is they bring in the staff, they inventory both campuses, tag missing furniture. They even tag the rooms. They provide the scanners, the software. Total cost for that service, and this was, I'm talking about a year and a half ago, was 100,000 just to do that. I'm sure that right now it's probably gone up. We just didn't have the funds back then to do something like that. And like I said, they have been doing the inventories. It's just that it hasn't been a complete inventory yet. And
Well, I mean, I think first of all, we need to look at a good system, that's gonna be able to be doing this and invest in it, because this is gonna be something that we're gonna be needing, for the future, no matter what. So I think that's the first thing we need to actually be doing. I mean, the reason why I'm saying that is because, I work for an entity and they just go in, they have a scanner and everything uploads to their system. So it's nothing of having to type in, serial numbers or anything like that. It's just, they're scanning and everything goes up into a system and that's it. So I think that's the way we should be actually running, this institution as well. And I'm thinking it's because we don't have a system that is something like that.
yes, and that is also part of it, that we don't have the system in place, the actual software to help us out. The current software that we have is what we have is a Banner system. But again, it's not the
So
most
the
efficient.
current system that we have is a clipboard. with a-
Well, yeah, they print out a report, they go inventory the items, they come back. Well, and that is the process, the piece of the process that is missing, right? They come back to the office, they enter the discrepancies on the system. Right now, what they're doing is they're doing the inventory, filing the discrepancies, waiting until they complete so let's say the building, and then going back and entering the discrepancies.
Or
And so
just
the
come back
auditor's
with a-
recommendation is do it as you're going.
Yeah, come back with a recommendation on maybe going, searching for a system. I think that's the first thing we need to do and see, how much we're actually looking at. Like you mentioned, a year and a half ago, we were looking at 100,000. We might be looking at maybe 150,000 right now, or 120, or whatever it is. But I think we need to look at that first, to be able to say, okay, and board, this is what we have, and then, look at where we could possibly find money. We could, if that's the case, and if that's what we're gonna want to do to be able to be up to par with this inventory, because it is important that we
Yeah.
do have inventory of all our assets in the both campuses. From computers to desks to chairs to podiums, anything. I think it's very important that we do have that information.
No, I agree.
I think what concerns me the most is that, it says on here that we noted that a large purchase of computer equipment was received on August 31st, 2021, has not been recorded in property records. So if we have an inventory, things on our property records, how much of equipment or items that belong to the college or that belong to the public have gone missing, for lack of a better term?
And again, let me, on that one item, this particular transaction, I think, again, we do need to make an adjustment on how we record the transaction. Currently, the way the system inventories the items is when we do the purchase order through the purchasing office, it automatically updates the inventory or property inventory. So that's how they keep track of the items.
But it's
So
not updated on a regular basis. So
well,
my concern is there a significant amount of or items that are missing or that are not inventoried? Or
there,
that's what I'm wondering.
well, they have identified missing items as part of when they've done their inventories. Again, part of the finding is that they haven't updated the system. They do have the discrepancies, like Mr. Angel mentioned, on paper right now.
So how long does it take to update with the current?
I'm sorry?
How long does it take to update the system? I guess basically what I'm
It is-
getting at is, if the board were to ask for a list of items that are missing or that are not inventoried anymore that was purchased with public monies, would we be able to get that list?
You would be able to get a list, however, it would not be, again, it would not be as fast as we would want to give it to you, because again, it's not right now on the system.
That's.
Now,
That's, we can't have that,
yeah,
you know, I mean, trustee Delgado just mentioned, you know, you're talking about a huge purchase order of laptops and computers. You know, we need to have, you know, yeah, checks and balances of where those
Yeah,
computers are at.
and on this particular transaction, let me just, again, provide a little bit of background to what the transaction that they identified is. We do leases on an annual basis from Dell. This particular transaction was, I believe, was 600 computers that came in right at the end of the fiscal year. The difference between how we process this transaction was that typically when we issue out a purchase order, let's say the purchase is from Dell, the purchase order is issued directly to Dell. And in the purchase order, the items are identified. They're already on the system. They get here, property inventory runs a report and reviews the information and tags the assets. This particular transaction, we purchased them from Dell, but the purchase was made by the finance company on our behalf. So the purchase order, because we finance it with another company, the purchase order was made by the finance company. So it didn't go through our system. So the equipment got here, they had to manually enter the assets into the system. So that was the delay. But I think looking at the finding, the solution is issue the purchase order to the finance company and that way the assets are already on the system.
I understand, but I mean, we just need to, we need to get a system, Mr. Vela, in my opinion, you know, and bring it to the board as a recommendation on what system would actually be fit for our institution, because we can't have assets just nowhere to be found, you know, I mean, and it might be a desk, you know, $300-400, and here's a laptop for $300-400, but still we need to have access of information of our assets, you know, it's something that we need to have, and I guess, you know, come back with a recommendation on a certain system that we need to purchase, because
Sure.
we can't have this.
Yeah, no, we'll look at a system and bring a recommendation to the board.
Thank you.
And then the last item that they're recommending, and this is again a recommendation that they made at the last year's audit, is that we establish a fraud hotline. We do have a policy, and we do have, like I said, internal controls throughout the institution. But best practices is recommended that we establish a fraud hotline. That's something that will work with the president's office and the finance division on trying to set up for this current fiscal year. And those were the items that again were reported. Again, these are items that they were identified as part of their review and recommendations that we're making. Again, management, we are in agreement, and Mr. Angel, Mr. Delgado, and Judge, we are taking these items seriously. We'll address those this fiscal year. Like I said, that way for next the next fiscal year audit, these items should have been resolved.
Great.
Thank you. Thank you, Mr. Vela. All right, we'll move on to agenda item number 10, which is the annual review and adoption of Laredo College Board Policy CAK Local Appropriations and Revenue Sources Investments. Mr. Cesar Vela.
Yes, this is an annual requirement. We are required by the Public Funds Investment Act that the board review the policy for annually. For fiscal year 2022, we do not have any changes to the policy. The only modifications are to section 5.1, and that is just on the designation of the investment officer, just to update the title. The policy references the chief financial officer. Now the title is just to update it to vice president of finance. And then section 6.1 and section 6.2 is just to reflect the open meeting date of when the policy was brought to the board, which will be this Thursday, the 27th. And then the effective date when that review was done, which will also be January 27th. Again, no revisions. It is essentially the same policy that was presented the last 2 fiscal years.
Thank you, sir.
Chair recognizes Judge Martinez.
Thank you. And on modification section 5.1, that is acknowledges the designation of investment officer. Do we have a specific investment officer ourselves? The college?
Well, the designation is to the VP of Finance and the Director of Accounting. If you're
Meaning
reference,
in your case?
yes.
You.
But to answer, I guess if you're asking if we have an external investment officer, we don't. We do have, again, the financial advisor, but that is mostly the work that's done on the bonds, not on the investment side. Yeah, but the designation is internally.
Would should we consider that possibility, since we do have quite a bit of, several $1 million worth of funds available? And should we consider the possibility of an investment officer?
Actually, I've looked at that possibility at one point. We were looking at it as an option for the endowment funds, to invest the endowment funds. The policy allows for that. It's essentially going through the process of approving firms to handle our investments. And that's something that can be brought to the board for consideration if the board so wishes.
Thank you.
Thank you, Judge. Thank you, Mr. Vela. All right, we'll move on to agenda item number 11, approval to enter into a contract with SHI International Corp. for information security services compliance required by Texas Administrative Code, Chapter 202. Dr. Fred Solis. Mr. Vela takes a break.
Good evening, members of the board. This is Albert Chavez, Senior Director of Information Technology for the record. I'll be presenting this item on behalf of Dr. Solis tonight, who's not able to be with us today. For this particular item, the request is for the approval to enter into a contract with Software House International for information security services. Under this particular contract, they will be providing a virtual information security officer to the Laredo College. To give you a little bit of a history, in September 1st of 2019, Senate Bill 64 that was passed by the Texas legislature requires that the college comply with Texas Administrative Code 202 and the cybersecurity framework. Under these two items, it requires that the organization have a designated information security officer. The organization had a search and hired an information security officer, came from out of town. The person worked from March 22nd of 2020 to July 16th of also 2020, 4 months. The person was recruited by the private sector. The organization launched another search and did not have a qualified pool of candidates. So the recommendation, at least for the next year, so we'll be in compliance, is to get into an agreement with this organization so they can provide a qualified information security officer remotely. The cost for this agreement is $112,000, 320, and it's for 12 months. And that will give the organization time to run the search again in hopes of finding a qualified person to fill the position. This contract also is through DIR. It is Texas DIR CPO 4398.
Any questions from any member of the committee?
No, sir.
Thank you, Mr. Chavez. We'll move on to the final item, agenda item number 12, approval for the purchase and implementation of the Lucian Experience Portal. Did I say that right?
Yes, sir. Okay. Yes, for this particular item, members of the board, we are requesting approval for the implementation and purchase of the Lucian Experience Portal. And what that basically is, currently today, we are using a product from Lucian called Luminous. And that product, the company Lucian has announced they will no longer be supporting that product, and they are moving to a cloud platform, which is the Lucian Experience Portal. Our faculty, students, and employees currently use the portal to access resources here at the organization. It is branded as Passport. So everybody here on the campus knows it as Passport. So this particular portal will bring the latest and greatest services to the campus. This portal on a day-to-day basis is used by students to register for courses, view their schedule, tuition and so forth, pay tuition, everything is done through the portal. Faculty also access it to look at the class rosters and so forth. So this is basically an enhancement or the next version to that portal.
Chair.
So
Chair recognizes Mr. Rangel.
Yes, sir, Mr. Chavez, is the new system gonna have any upgrades as like maybe more features besides the current features that are being offered right now?
yes, so the new portal also will function as the mobile app for the organization.
Okay.
So the portal has a completely different look and feel. The functionality still remains. It's just been completely revamped and refreshed and brought up to today's standards. The current portal that we have, it's many years old.
Okay.
So it's using older technology, and it's also run in-house. So basically, the Luminous platform that we have today is installed on servers that are run here at the campus. The new Lucian Experience is basically a cloud service that's being offered through Lucian.
Okay. So it's gonna be able to, it's gonna be able to be like an app, right?
Yes, so basically this portal will work on any
Smartphone.
Windows or Mac laptop, desktop, and is also will serve as an app for the campus.
And for smartphones.
Yes, sir. It's definitely compatible with both the Android and iOS devices.
And staff is okay with this?
Yes. The cost for the project for year one, which includes the implementation, is $59,156. And this will be done through our existing Texas Connection Consortium agreement, which is the agreement that we use to purchase and do the maintenance for our existing banner infrastructure. It's a negotiated agreement for Texas institutions that use the Lucian products.
And another quick question, and I guess student and employees will not have to create a new password and do all that. It automatically allow them to go into the system like if they're using Passport right now, right?
That's correct. They will use the same credentials.
That's it.
And year one, like I was mentioning, the cost, which includes the implementation and the licensing, is $59,156. We, on an ongoing basis, the cost to the college will be 31,000. Today, we pay 23,000 for the Luminous platform. And this will, again, the reoccurring cost will be added to our budget as part of the budget planning process.
Thank you, Mr. Chavez. All right, well, that'll conclude our agenda for today. If I could have a motion for adjournment.
So moved.
All right, we have a first, we have a second.
Yes. Aye.
No opposed. All right, we are
Thank you.
adjourned. It is 7:05. Thank you, everyone.
Thank you, guys.
Thank you.
Thank you, Ms.
Thank
Vela.
you, Ms. Vela.
Thank you, Ms. Vela.